Felix here. The Fed is telling us interest rates are going to go up to 4.6, maybe even 5% or higher, and then they're going to stay there for the medium term. Nonsense. And they do not plan to do this either because they have a few brain cells left. And I'm going to guide you through here in the next 2 minutes what that means for your portfolio, what that means for your investment horizon. So stick around. Before we do that, get your hands on Goldman's top 12 stocks that they say are going to outperform the market in 2023. It's a beautiful free benchmark at felixfriends.org/top 12. Where is it? Here it is. felixfriends.org/top 12. You get ROIC numbers, free cash flow margin numbers, long-term earnings per share numbers, all the kind of important stuff for all of these stocks. It makes you smarter. Of course, don't be silly and just run out and buy them blindly, but get your hands on it. felixfriends.org/top 12. Now, the following, of course, is financial advice. It comes straight from the mouth of a golden retriever who whispered it to me a few minutes ago. And okay, let me just show you where we are, right? So at the moment, the Fed is telling us, and the market is believing it, that interest rates are going to end in 2023 at something like 4.6% and are going to stay at these sort of 4.5% levels or thereabout well into 2025. Why do I snigger? Because anyone who does the maths, and I'm going to walk you through the maths here, knows that that's the biggest load of poppycock anyone's ever heard of. It's complete nonsense. Let me explain to you why. In 2021, the US federal government paid $392 billion in interest. That's about half the US defense budgets. And what was the interest rate on that? It was 1.8%. And actually, a great deal of US debt is actually held at pretty short-term interest rates. So what would happen if we get a 4.6% interest rate, which is what the Fed is telling us we will have by the end of 2023? What would be the interest payment, you think? Well, it would be 1.028 trillion. Yeah, trillion. Basically, 3 times what it was this year. It would be exceeding the $800 billion defense budget and pretty much anything else the government is spending money on. Absolute madness. The interest payments would be 4.5% of GDP, which is just insane. And what would happen if this were to actually happen? You're thinking, well, they've done loads of insane things. They told us inflation was transitory. Maybe this is actually going to happen. Well, right. So who's actually paying for government debt? So what's happening at the moment is that the government, in its internal wisdom, basically spends loads of money and therefore sells debt. And who buys it? The Fed. Okay, they sell debt to the Fed. That's the biggest customer. Now, what is the Fed about to do? Well, the Fed is apparently going to do QT, which means selling government debt. Right. So how does that work? Well, what's actually happening here then is that the government has to issue a lot more debt next year because they got to spend $1 trillion just on interest. So you've got an extra $1 trillion in debt coming out, and the Fed is selling debt. So you've got somewhere north of $1 trillion extra in debt being sold with no real customers. What does that mean? It means interest rates actually go up much, much more because you're going to have to pay a much higher rate as the US government to attract buyers for all of this debt because your biggest customer has just stopped buying. So what happens then with all the high interest rate that you're paying? Well, you create more interest payments and therefore, so more payments on the debt, and therefore you have to issue more debt to pay for the payments on the debt, and you have to pay higher interest rates and so on. So it's a vicious cycle. It just doesn't end anywhere happily. It's the sort of thing you normally see in emerging market economies or, sort of tin pot hut economies where dictators do something idiotic and you get into the situation and then somebody steps in and bails you out. That's usually what happens, except here there's nobody left to bail you out. You think I'm making this up? Well, the Bank of England experienced exactly this about 10 days ago. The Brits tried exactly this. The Brits thought, well, let's spend more. And if we spend more, what do? Well, we sell more debt. And the Bank of England, which is their Fed equivalent, thought BOE, that is Bank of England, were also selling debt. And therefore, there was nobody in the market. Market collapsed, no liquidity. So what happened? What was the solution to this? Quantitative easing. Yes, the central bank buys the debt back. What does that do? It causes inflation. That's what got us into this mess to start with. So the Fed, either they've not done any numbers on this at all, and they're just complete blithering idiots. And I actually don't think that they are. I think they're just bluffing. They are in a desperate position to appear really, really aggressive. And that's why there is this, boy band of Fed presidents touring every TV station and any town hall with more than 3 people. And then he'll have them every single day to tell us how they're tough on inflation. And yes, they will raise rates and keep them high for longer. And yes, they will shred money and all of that, knowing full well they can't. The Fed cannot keep interest rates at high levels. I mean, sort of 4.5%, 5% for extended periods of time, because if they do that, they kick off this cataclysm that I just ran you through. And the only way out of that would be for the Fed to bail out the federal government with more quantitative easing, more money printing, causing more inflation. So actually, there is a very short window for the Fed to achieve its objectives, and therefore, they have to be seen really, really tough. So what does that mean for you and me? Well, first of all, do some maths and make some money. We do maths here. We're up 11% so far this month on our options portfolio, 112% up on the year. And I'll tell you in a sec how you can join us on that. Hint down below. But if you think about this, what does it mean? It means rate hikes in November and December have to be high. They have to come out with a sledgehammer. And they might even want to come out with a sledgehammer in February and maybe March, because they need to get this under control, and they need to somehow wish and pray and hope that the basing effect means that inflation is actually going to come down. Because if we are halfway through next year and inflation hasn't come down and they have to keep interest rates high at this level, they're about to basically destroy the US economy. Yeah, simply said. Now, does that mean you shouldn't be investing? No, it doesn't, because it would just mean more inflation, which means being in assets, quantitative easing, money printing has been very good for us who are in assets, right? Stocks went up, real estate went up, everything went up. And that's kind of where you want to stay. So to be safe, that's what I would do. Just pick good quality stocks, or come and join us and learn how to trade following my trading protocol, which I've developed over many years as a former banker. I probably should have said that. Former economist too, which means I'm wrong sometimes, apparently. This program is for 5, 6, 7, 8, 9 figure investors. If you were 9 figures, you'd be one of just 2 people. So you might be a little lonely, but plenty of 8 figures and 7 figure people in there. And just book a call with us. Let us walk you through what it's all about, how it functions. Essentially, I teach you my full trading protocol. You get to see me trade live every week, complete transparency of every single trade I've done every day, every year. Well, all of the year, actually. And go to felix.coaching, book a call. If you're not quite there yet with 5 figures, if you're getting started, it's brilliant. It's exciting. It's the best time to do so in a bear market. Get cracking. Let us help you build an extra income stream. And by that, I mean follow my protocol for options trading. felixfriends.org/options is the place to do that. You get 100 pre-recorded lessons. You get access to watch me trade live every week. You get access to my master options portfolio. You can see exactly how I implement it. A, for transparency, and B, also to teach you experience much faster than anywhere else. So check it out. felixfriends.org/options. Write down that coupon code there, freedom, and take advantage of that before the weekend. And lastly, let me know what you think of this madness. Put it in the comments. Thanks, guys. Thanks for watching.